accounting for partnership firm. And again, you have to be attentive in terms of your accounting logics, okay? Because in this module, we will be learning revaluation of assets and liabilities. When we say revalue means that the carrying amount of the asset which is appearing in the balance sheet is going to be changed. All right? So you'll see what to do when the value of the asset or liability will be changed. Question arises that when we revalue these assets and liabilities. The thing is, whenever there is an admission of a new partner in the firm, or there is retirement of the existing partner, so that the other partners will be the new partners for that firm, or whensoever there is a change in partnership deed, the assets and liabilities will be revalued. Okay, so revalue, as I was discussing with you, that it will bring change in the value of asset and liability. And revalue means that we are bringing our assets and liabilities equal to the fair value that is existing in the market. Okay, so we have to put that fair value for our assets and liabilities, but certainly an accounting treatment is required. So be attentive for your accounting logics. The thing is that, yes, admission and retirement is the case. Well, following accounting treatment would be required in order to revalue our assets and liabilities. So if there is increase in asset value, we know asset is debit in nature. Whenever there will be increase in the asset value, that will be debited. So the specific asset which is increasing will be debited, and its credit will be given to the revaluation account. Well, so if an asset's value is decreasing, yes, the revaluation account will be debited and the specific asset will be credited for this. So it's not a difficult accounting entry if you are confident on the rules of debit and credit. Okay, well, increase in liability will cause debit to revaluation and credit to the specific liability which is being increasing. Okay, so the liability when increases, it is credited. Okay, when it is decreased, it is debited along with a credit to revaluation account. I trust that you are very much confident on these four accounting entries. There is no issue with these four accounting entries as to increase or decrease in assets and liabilities. Second effect is given to the revaluation account. Well, so the gain on revaluation account, now the revaluation account will be closed by giving debit effect. If there is a gain, that gain will be credited to the partner's capital account. Yes, the old partner's capital account, or the partners which were existing on the date of the revaluation with their ratio, obviously the existing old ratio. Or if there is a loss, that loss will be debited to the old partner's capital account, obviously with their old profit sharing ratio, and will be credited to the revaluation account in order to close this revaluation account. All right. So this is what we do in revaluing our assets and liabilities. Okay. So any gain or loss, remember, any gain or loss whatsoever that is happening at the time of revaluation of assets or liabilities is in fact the right for the old partners. So that is given to the old partners immediately, so that the new partner will not enjoy the increase in the value of assets or will not suffer the decrease in the value of assets. So in other words, will not enjoy the revaluation gains of assets and liabilities, or will not suffer the revaluation losses of assets and liabilities. So immediately at the time of admission or retirement of the partners, this revaluation accounting needs to be done. All right. Thank you.